Good morning and welcome to our event, Financial Inclusion in the Caribbean and Why It Matters for the United States. I'm Melanie Chen, a board member of the Atlantic Council, and I led the establishment of our Caribbean Initiative. This morning, as the world looks ahead to the economic implications of sanctions on Russia, we are here to discuss one of the greatest challenges the Caribbean is facing, the economic implications of the withdrawal of correspondent banking relations. The loss of correspondent banking relations has an impact across the Caribbean, including the everyday working class citizen in the region. It disrupts the flow of remittances, is a barrier to international trade and investment, and impacts the all-important tourism sector, of which so many Caribbean countries are dependent upon. All of this is tied to financial inclusion. For Caribbean governments, it keeps them connected to the global financial system. And for citizens in the region, it is a medium that allows them to access and use formal financial services. Today, we will launch a report from our Financial Inclusion Task Force that addresses this topic. The report, Financial De-risking in the Caribbean, the US implications, and what needs to be done, is a culmination of an almost year-long effort to bring awareness about the need for financial inclusion in the Caribbean. Jason Marzak, Senior Director of the Adrian Arsht Latin America Center, will highlight in a moment some of the report's key contents and how we got here. This issue of financial inclusion is increasing as a priority as Caribbean countries continue to rebuild their economies during the COVID-19 pandemic and brace for this year's hurricane season. Simply, greater financial inclusion helps provide regional governments with the tools that allow them to provide essential goods and services to its citizens during crisis moments. And crisis moments are exactly what is facing the Caribbean. The small size and import-dependent economies of the Caribbean make them disproportionately affected by changes in global economic circumstances, from disruptions in supply chains to rising oil prices. Therefore, a sense of urgency is needed among us all to remove the barriers of financial inclusion for the Caribbean. This is why I am grateful for the members of the Financial Inclusion Task Force for their participation and insights leading up to the report. I thank you all. I'd also like to thank the many individuals across the Caribbean and the US government who provided feedback and guidance ahead of the report, and to thank the experts joining us today who will shed greater light on the importance of financial inclusion. With that, I'll turn it over to Jason.
Thank you so much, Melanie. A year ago, our intention to tackle financial inclusion in the Caribbean, frankly, it started with Melanie's vision. As Melanie said, financial inclusion is among the most important topics for the region, which led us to establish our inaugural Financial Inclusion Task Force, which is frankly the first task force of the Caribbean Initiative that was established last year. This group of US and Caribbean public and private sector members and multilateral representatives that came together over a period of 6 months to look in depth at the issue of de-risking. Now, their insights and expertise guided the report that we are launching today, titled Financial De-risking in the Caribbean, the Implications and What Needs to be Done. In the report, the task force identified why correspondent relations are vitally important to the Caribbean and by consequence for the United States as well, and why the Caribbean has lost many of these relationships since 2015. For those watching over Zoom, you can find the link to the report in the chat. For the Caribbean, correspondent banking is in many ways the lifeblood of regional economies. It's the medium governments and citizens use to access global finance. It's trade investments. It's important for tourism and contributes to the flow of remittances. And as Melanie alluded to, at this critical global moments, we only have to look at the economic fallouts from Russia's invasion of Ukraine to see the importance of staying connected to the rest of the world through the financial system. The task force looked at the importance of correspondent banking overall and during crisis moments. As Melanie noted, these crisis moments are poised to unfortunately only grow in scale. Beyond rebuilding during a devastating pandemic, and future natural disasters, the anticipation of rising fuel and food prices is likely to further exacerbate the Caribbean's economic position. And this reinforces the need for the region to access the development tools that make financial inclusion easier to achieve. As well, this task force sought to bring to light through its own deliberations and outside consultations why de-risking matters to the United States. So why is that? For one, de-risking disproportionately affects working class populations, with the possibility of driving them into poverty. This can create instability and encourage shadow banking, both of which are adverse to U.S. interests. Second, lost access to the U.S. dollar via de-risking also increases the likelihood that Caribbean institutions might normalize using the Chinese RMB over the U.S. dollar. This is why the task force looked at how Caribbean governments can work with the United States and international financial institutions to overcome the challenges associated with de-risking and the stumbling blocks that prevent them from doing so. It led to 4 key recommendations, all of which are explored in greater detail in the report, and I'll mention them briefly. First, to overcome the rising cost of compliance that bigger correspondent banks often cite, the task force recommends the creation of a collective mechanism that pools transactions to a size that is profitable for these banks. They also recommend standardizing international compliance standards to mitigate what we frequently refer to as constantly moving compliance goalposts that are hard for institutions to keep up with. And noted the importance of relationships between the region and U.S. bankers. A key recommendation is an annual U.S. Caribbean banking forum that facilitates relationship building with big and small correspondent banks. Finally, the task force highlights that just like SWIFT, correspondent banking should be deemed critical financial market infrastructure or a public good due to the importance of these relationships for economic development, citizen livelihoods. To build out these recommendations, the task force and its report benefited from strategic one-on-one conversations with central banks in the Caribbean, representatives of multilateral institutions, and officials from the U.S. government, including the House Financial Services Committee. That committee's chairwoman, Maxine Waters, was supposed to join us today, but is now unable to join due to other obligations related to the Russian invasion of Ukraine. But I will share a few of her reflections as she wrote in the report's forward, where she states that, quote, the ability to build businesses that support trade and tourism, to employ citizens, to facilitate economic development, and to allow families to send and receive funds from abroad is dependent on the ability to use banking services or access them at a reasonable cost. Citizens rely on this vital connection to engage in their daily lives, highlighting the fundamental importance of financial inclusion to the Caribbean. Access concerns stretch to every island and every person in the region. Chairwoman Waters then goes on to say that, quote, this report demonstrates the real effects of de-risking in the Caribbean and explains in detail why this issue matters for the U.S. government, its citizens, and its interests. And that, quote, most importantly, through its collaborative format, it recommends tangible actions such as a multilateral banking forum and a regional mechanism to increase transaction volumes to remedy this longstanding issue. The chairwoman concludes by saying that, quote, it is by working together like this that the United States and the Caribbean can best withstand and tackle any economic or security challenges ahead. I, again, the chairwoman, look forward to engaging with the Caribbean Issues Financial Inclusion Task Force and its members to continue the efforts to repair the region's connection to global finance. Together, we can protect, revitalize, and support the economic opportunities for an entire generation, end quote. We thank Chair Waters for her efforts, and we look forward to working with the majority and minority sides of the House Financial Services Committee on these issues. Before we begin, I'd like to also thank, as Melanie did, our task force members for their support and for sharing their expertise with us over the past year. All of them are listed in the report being launched today. And I'd like to especially thank Assistant Director of the Caribbean Initiative, Wasim Molla, who worked as the task force rapporteur Now we will turn to our keynote conversation, to be followed by an in-depth look at findings with two task force members and the ambassador of Antigua and Barbuda, States, Sir Ronald Sanders. To begin with our first conversation, we have with us Cleviston Haynes. Mr. Haynes is the governor of the Central Bank of Barbados. He joined the bank in 1980 as an economist and has since served in several capacities, including as chief economist and deputy governor. Outside of his role at the bank, Mr. Haynes served as a technical assistant to the IMF for the Caribbean, Canada, and Ireland, and was the chairman of the Regional Financial Stability Coordinating Committee. Joining him in conversation is Caribbean Initiative non-resident senior fellow, Ambassador Riyad Insanali. Prior to joining the Caribbean Initiative, Ambassador Insanali served as Guyana's ambassador to the United States and permanent representative to the Organization of American States. With that, I'll turn it over to you, Ambassador Insanali.
Thank you, Jason. Good morning, everyone. And Governor Haynes, thank you very much for joining us. It's a pleasure to have you here. We look forward to your perspectives, especially as you sit as governor of one of the more important central banks in the region. To cut to the chase, Governor, why is financial inclusion important for the Caribbean? Can you give us a sense of the domestic context and place that in the international context? That is to say, how are Caribbean systems and people being effective, and what are the implications of the threat of financial exclusion for the region, its regional partners, and its trading partners, especially the United States of America?
Good morning, and thank you very much, Riyad. Let me offer, first of all, my thanks for this opportunity to share some thoughts on this critical topic of financial inclusion in the Caribbean. And let me at the same time thank the task force for their work. It was interesting to hear some of the findings that were described just now, and some of which I think will align with some of what I will also have to say this morning. Now, you've asked a very broad and wide question, and forgive me if I say a lot on this topic, because we need to emphasize that for the Caribbean, financial inclusion has both domestic and international dimensions, and it needs to be analyzed from both the micro and macro perspectives. So to place your question in context, it's important to recognize that financial development in Caribbean economies lags that in high and middle income countries. At the domestic level, access to credit and financial inclusion remains a problem for many. In my own country, Barbados, for example, a large percentage of the population does have access to banking services, whether through banks or credit unions. But there's still a segment of the population that is either unbanked or underbanked. Now, COVID-19 has hit these Caribbean economies very hard, particularly the fraction of economic activity and the rising unemployment set the region back several years. In most countries, the fiscal situation has deteriorated because of lost revenue and rising expenditure, and debt stocks have risen. Restoring sustainable growth for the region will therefore require a combination of several growth-enhancing initiatives, including a greater embrace of technology, balanced sectoral development, new investments, and supportive economic policies, including the fiscal consolidation. But as that recovery takes root in our traditional sectors, financial inclusion that unlocks the potential of vulnerable and marginalized groups and caters to small, legitimate businesses will be essential for the sustained economic development of the region. I can tell you that the World Bank, in a recent economic inclusion report, has argued that economic inclusion programs, inclusive of access to finance, help to boost the income and the assets of the world's poorest individuals and households. Access to financial services, such as bank accounts and digital payments, helps people escape poverty by facilitating investments in their health, education, and small businesses. And it makes it easier to manage financial emergencies, including job losses, that can worsen the economic circumstances of families. Now, if we embrace digital technology to deliver financial services to all segments of our societies, I believe that that is the way of the future. there's a growing body of research that reveals that, reveals many potential development benefits from financial inclusion, especially from the use of digital financial services, including mobile money services, payment cards, etc. As our economies went into lockdown in 2020, COVID unmasked some of the challenges associated with the lack of access and our lack of preparedness for the digital future. I can say to you that one interesting development in Barbados was the introduction of digital welfare payments, which helped to ease the efficiency and the smoothness with which persons were able to get their benefits. As you all know, in recognition of the gap, the countries have taken different approaches, including modernizing our payment systems to facilitate more electronic transactions, but there's also increased experimentation with digital currencies. But financial inclusion, as we're all aware, is not only about how we enhance domestic payment systems and provide access to banking services at the domestic level, but how we integrate those small economies into the global economy in a cost-effective manner. Small open economies like ours need to trade in order to survive, to facilitate inward investment and remittances by Caribbean people in the diaspora. Correspondent bank relationships are therefore, I think, integral to these small open economies integrating into the global economy. They are as vital for indigenous banks, which are often institutions that suffer most from the loss of CBRs, as they are for the globally recognized international banks that operate in our market. I want to make this point this morning, that the denial of correspondent banking relationships for banks in small open economies like ours is tantamount to being denied access to the SWIFT network. It is, I think, to put it mildly, a very extreme measure. And I was encouraged by the contents of the report, which suggests the issue of designating CBRs as really a public good, which ought to be available to everyone. Because while our countries have started to recover from having the loss of relationships and the situation has started to stabilize, it only takes you, if you only have one correspondent bank, it only takes you to lose that correspondent bank to be cut off from the international system. And that is not a sustainable situation. Likewise, we've benefited in the region from having international banks, which have continued to get correspondent banking relations. But as we all know, many of the international banks that are in the region may not be here forever. And therefore, what happens when they pull up state? Does this mean that the region will be without correspondent banking relations? And so these are the types of issues which I think we have to consider, which we have to confront, because if we are to survive as a region, then it's very critical that we continue to have access to correspondent bank relations.
Thank you very much, Governor. From what you're saying, it really sounds as if the Caribbean region is being subject to sanctions. We now see what's happening in Ukraine and how Russia is being sanctioned with the removal of SWIFT relations. And we haven't invaded anyone, but nonetheless, we are paying the price for a change in the rules of the game that is going to affect us very deeply. What do you think the United States and the IFIs can do to remedy the situation, and how can they promote financial inclusion for the region?
Well, what is this all about? This is about the economic development of this region. Many of us are supposed to be middle-income countries, but what that has meant as middle-income countries is that we have also been denied access to funding at rates that would help to accelerate our economic growth. Because we want to basically be able to achieve a level of economic development that will enable the sustained increase in prosperity and quality of life for our people. Now, this is a very complex thing, and we need to be able to draw on the strengths and resources of others if we are to enhance the welfare of our people. Now, economic development requires us to strengthen the function of our institutions, to make them adaptable to the times in which we operate, to build out our education and health systems that would allow our people to be able to compete in the global economy and more generally to strengthen our infrastructure. It is in this context, therefore, that I think our allies and the IFIs have important roles to play. For example, the access to international finance is crucial to economic growth and long-term development. I think we all know the valuable role that the IMF can play in helping Caribbean economies that encounter economic challenges, in strengthening their macroeconomic frameworks, and in helping to catalyze program financing. Countries like my own that have small populations face significant risks to climate change. And this vulnerability means that we need to strengthen our infrastructure to be able to withstand the type of climatic events that are seemingly more commonplace these days. But the international financial architecture has for too long been built on a one-size-fits-all model. Small countries that make progress in enhancing their per capita incomes are expected to subject themselves to the vagaries of the international capital markets, which, to be honest, accommodate us, but they are not specifically designed to cater to the needs of small sovereigns. The reliance on per capita income as a benchmark for providing funding by FIs without taking into account vulnerability has long been identified in this region as a weakness in the architecture that needs to be addressed, and urgently. And the current initiatives, though welcome, the creation of the RSD, are long overdue, but they are unlikely to be sufficient to promote the type of economic development to which we all aspire. And it goes without saying, therefore, that there needs to be a revision to the architecture to address the needs of small island states, taking account of their unique characteristics. And that is where I believe our allies and the IFIs have a tremendous role to play in helping to bring this about. Because I think that if we're able to do this, it will be able to give our countries within the region that ability to take a leap forward, particularly middle income type countries like Barbados and the Bahamas, which have been, for many years, excluded from access to funding from an IFI like the World Bank, which is basically an institution set up to foster economic development. And when you think of the capital markets, countries like our own, you have access, but the cost of such funding is very significant, or in order to get very cheap funding, you have to borrow substantial amounts of money. You have to, as I said, negotiate the vagaries of the market, because when the market has funding, you may not have needs, and when you have needs, the market may be going through some turmoil. And therefore, it's very important that our allies and the IFIs recognize that small island states like our own are unique, they're different to large economies, and therefore we have to take that into account as we develop and devise an architecture for our people.
Thanks, Governor. We're close to the final question, and just to pick up on your point about what the IFIs can do, I know, and you are more aware of this than I am, that it's not simply a matter of throwing our hands in the air and lamenting the state of play. Our Caribbean banks and governments are actually working together to try and come up with solutions. And I think that Barbados itself has been in the forefront of exploring fintech solutions. And could you tell us a little bit about that? Give us a few lessons to be learned from the Barbados experience?
Well, I don't know if the Barbados experience will give you the lessons. You are correct that within Barbados, we have entities that are engaged in promoting fintech, and at least one of our entities has actually gone out within the region and also, I believe, into Africa to promote the whole question of the digital currency. We believe that this will be part of the future. As we move away from cash, that there will be some form of digital currency. Certainly electronic solutions will exist in terms of the mobile, but there is the likelihood that in the future there will be the digital currency, and therefore we have to be able to adapt to the fact that people are going to use technology more and more, and we're going to reduce the use of cash. I don't think that cash is going to immediately go away, but there's going to be increased use of the technology, which means that this is how persons are going to be able to effect transactions. And what we have to do with the technology is perhaps even more so than what we do with the issuance of currency is how do we use the technology as a backstop, for example, to help us to strengthen our AML systems, because a large part of what happens with this financial exclusion is the fact that there's concern about the strength of AML CFT systems within the region. And what I think will be important is that we are able to put in place AML CFT systems that are robust, that will enable us to be able to, with certainty, demonstrate that we have good information on those who transact business, and therefore we've strengthened the infrastructure that will enable us at all times to be able to participate in the global economy, not to incur the risk of the loss of the CBRs. And so when I think of the technology, the fintech technology, I think even less about the digital currency and more about the digital infrastructure that supports financial transactions within the region, and that therefore allows us to be able to deal with the rest of the world. And that is where I think a lot of our focus will need to be on in the years ahead.
Thank you. Thank you very much, Governor. I think you've set the scene admirably for the panel discussion to follow. And we thank you sincerely for being with us this morning and sharing your insights with us.
Thank you very much.
Well, as Ambassador Sinali said, thank you so much, Governor Haynes, for that important insight, Ambassador Sinali, for your moderation of that discussion. Really important comments, among which the importance, as you mentioned, the Governor, that the international financial architecture is can't be a one-size-fits-all approach, and we need to differentiate for different markets, and that's part of the discussion that we've been having as part of the Financial Inclusion Task Force. We're going to now take a closer look at the issue of de-risking, how it's connected to financial inclusion, and also why it matters for the United States and U.S. Caribbean relations. With us, I'm pleased to have Ambassador Ronald Sanders, who is the Antigua and Barbuda's ambassador to the United States and also permanent representative to the Organization of American States. Ambassador Sanders, great to have you with us. Ambassador Sanders has long championed these issues, including working with the House Financial Services Committee as chairwoman in the past to address de-risking. So really fantastic to have you joining us today, Ambassador Sanders. Finally, we also have two members of our Financial Inclusion Task Force, Don Spicer and Henry Mooney. Don is the Executive Director for the Caribbean Financial Action Task Force, and Henry is an Economics Advisor for the Caribbean at the Inter-American Development Bank. Tim Daly, the Head of Global Public Policy from Western Union, was supposed to join, but like the chairman, had to cancel due to the Russian war in Ukraine. We're going to start this conversation with an overview of the importance of correspondent banking relations and de-risking's effects, why it's happening, and then also look at the U.S. importance, then we'll dive a little bit more into some of the recommendations from our task force. Please go ahead, if you're watching via Zoom, to add your questions using the Q&A function. Ambassador Sanders, I'm going to start with you. During our Financial Inclusion Task Force, many members highlighted that correspondent banking is critical to the Caribbean's connection to the global financial system. And the governor was speaking about that as well. In the report, the task force members focused on the role correspondent banking plays for the tourism sector, for remittances, and access to international trade. you can elaborate a little bit more, Ambassador. Why do you see, why are correspondent banking relations so important for these different sectors in the Caribbean, and which countries are most affected by this issue of de-risking?
Let me start. Can you hear me?
Yes.
Let me start by saying that dealing with correspondent banking relations is not a new issue. This has been going on since 2018. Antigua and Barbuda hosted the first conference, international conference on the problem of correspondent banking relations in Antigua in 2018. And at that conference, we invited regulators from across the Caribbean and the United States. We also invited the International Monetary Fund and the World Bank to be present. They both came at the level of Vice President of the IMF and participated fully in that meeting. It was there that we first began to adumbrate precisely what the difficulties we would face for all sorts of transactions if correspondent banking relations, which even at that time had already begun to be cut off by the global banks in the United States and in the United Kingdom. Now, I think it's important to understand why it was that they were cutting off those correspondent banking relations. The regulators in the United States and in the United Kingdom took the view that the Caribbean was, and they still take that view incidentally, a major money laundering area. In fact, if you look at the United States International Narcotics Control Strategy report for the last 4 or 5 years, you will find that they say in every year that every country in the CARICOM region is a major money launderer. It is absolute nonsense, of course, and it is based on no facts whatsoever. In fact, if you look at the facts of the matter, you'll find a completely different picture. I'm sure Ms. Spicer will be able to testify that in the context of the AML CTF, the anti-money laundering and counterterrorism financing rules or measures by the Caribbean, by the Financial Action Task Force in Paris, and also by the Caribbean Financial Action Task Force, that countries of the Caribbean are well ahead in establishing robust anti-money laundering and counterterrorism financing schedules. In fact, in some cases, more ahead than the United States, where, for instance, in the case of being able to reveal the beneficiary orders of international instruments like IBCs, Delaware, for instance, you can still open an IBC up to recently without disclosing who the beneficial order is. You cannot do that in the Caribbean. We do not accept cash in our banks, except small amounts for tourism, for tourists who come to the country. And we have a tracing mechanism for any kinds of money that comes into the bank. We have to know who the beneficial order is. We have to know where the money is coming from. We have to know the address of the person of who's sending the money, and it's all very traceable. And I should point out that in the last 15 years, where billions of dollars have been laundered across the world, not a single Caribbean bank was amongst them. The other point I should make is that prior to 2 years ago, 95% of the banks in the Caribbean were foreign owned, either owned by Canada, Bank of Nova Scotia, Royal Bank of Canada, Canadian Imperial Bank of Commerce, and by banks out of the United Kingdom like Barclays. So, you know, you have to ask yourself, if banks were laundering money, who exactly was responsible for it? And I think this is a question at some point somebody has to address. But we've been dealing with this question since 2018, as I say. We got interrupted because of COVID in 2020, when the activities we were undertaking slowed down. But a committee of ambassadors led by me met with Maxine Waters, then the chair of still the chair of the Banking Committee of the United States House of Representatives. She brought together regulators, the main bankers in the United States, and ministers from around the Caribbean, including 3 prime ministers, to talk about this problem. Unfortunately, as the thing was beginning to get momentum, and I have to say that Maxine Waters is a great friend and an ally in all of this, though she didn't start off being that way. She too fell victim to the mythology that has developed that the Caribbean is just awash with money laundering. It was only after she herself saw the facts that she changed her position on that. But she was very helpful. Her committee was very helpful, and that began to take shape. Unfortunately, COVID intervened. We stopped having the kinds of meetings that we were having with regulators, with bankers, and so on. But we need to get it back on track. And if I might just say one thing, we've not mentioned one elephant in this room, and I think we better mention it now, both in relation to the kinds of loans that IFIs make to the Caribbean on what they call concessionary terms, on the one hand, and what happens if we lose correspondent banking relations. When we lose correspondent banking relations, it is the equivalent of what the European Union and NATO nations have done to Russia. That is, you've removed SWIFT effectively, because correspondent banking relations takes place through SWIFT. And when those correspondent banking relations are cut off, we get cut off. And so it is a danger. But where do we go when we no longer have access to SWIFT? I'll tell you where we were going to when we were losing so many of our correspondent banks in the United States. We were going to China. So there I want to say is the elephant in the room for both of these things.
Thank you very much, Ambassador. That's as you pointed out, that's one of the points of the deliberations we had as part of the task force, and some of the secondary implications of de-risking, and that there's a look at the Chinese RMB as the currency of choice if there is loss of access to the dollar. I want to get back to the issues you raised on money laundering and other issues around that, and we look at kind of some of the reasons why. And we'll go back to Dawn. I'll go back to you on some of those questions. But Dawn, let me start with you on if you can help us to set the scene a little bit more on, as Ambassador Sanders did, on the vital importance of de-risking. For some, it might just seem like a financial term, but it has real implications on real people's lives and on the ability of the broader Caribbean to be connected. So, Dawn, which populations are most affected by de-risking? And also, if you would like to elaborate on some of the countries that are most affected as well.
Thank you. Good day to everyone. Thank you, Jason, for the question. Certainly, de-risking is a very serious issue for the region. In terms of the populations most affected, unfortunately, most of them are the working class and migrant populations that rely on remittances and other financial transfer services to enhance their day-to-day socio-economic positions. So this has been especially more prevalent during the pandemic, where persons have lost their jobs and they lost their economic purchasing power, etc. So the de-risking threat has had an impact on money value transfer services, with either the removal of correspondent banking services or curtailed activities that results in limits to the transfer amounts, which then require more frequent transfers, resulting in increased cost. So, for example, the report noted the tourism sector, and the tourism sector in the Caribbean represents a significant share of GDP for many island states. And so the negative impact affects industries such as airlines, hotels, restaurants, shops, tourism activities, your snorkeling, your other things fun things that you do. The persons employed in all those sectors are directly affected by this de-risking in terms of that. With regard to the countries, certainly we have Belize, we have Barbados, Antigua and Barbuda, Trinidad and Tobago, Jamaica, Dominica, Suriname, the list goes on. So everyone has been negatively impacted by de-risking, with some greater than others, because some have not totally lost their correspondent banking, but they have had some of their, services curtailed because of the requirements from the correspondent banks. I would like to say I certainly agree with Ambassador Sanders in terms of the AML, CFT, CPF frameworks for jurisdictions within the Caribbean. They have all been working tirelessly over the years to strengthen them, to have laws in place. And while there's some issues of implementation, we are a small region, small economies, issues of resources like everyone else, which has not been helped by the pandemic. So certainly I agree with him that we are strong in terms of protecting our businesses and so forth from money laundering and terrorist financing. Yet, of course, there's this perception of, lots of money laundering and drug trafficking and other types of crime. So this is what I would say on this. Thank you.
Thank you so much, Don. Henry, I want to ask you from an IDB perspective, multilateral institution perspective, how do you see correspondent banking, and how's the IDB and other multilaterals seeing correspondent banking as connected to financial, more broadly connected to the importance of financial inclusion?
Yeah, thanks, Jason. Let me just start by congratulating you and thanking you for the report and being part of the task force, because I think it's an extremely important topic. And having participated for the last year, I think the discussions have been very rich and very focused on the key issues. I mean, just stepping back as an economist working for a development institution, at the highest level, the recipe for development for all countries is the same, right? You need labor, you need capital, and you need productivity. So the link, financial inclusion, financial development, and correspondent banking is very clear, right? Countries in the region, whether they're low income or middle income, they need to access international capital markets, and they need to be able to encourage foreign investors to provide financing in order to lift sectors of the economy and to finance corporates that provide employment and provide the potential for growth. So at the very basic level, correspondent banking and the ability to access foreign financing and foreign exchange is extremely important, right? So any friction that you add to that system, any complexity or additional costs or additional hurdles, is bad for development in as much as it can curtail those incentives to invest. So I think at a very high level, the institution that I work for and all of the other development institutions and practitioners in development are very keenly aware of the importance of this issue and making sure that it is minimally disruptive. And you mentioned, sorry, you were saying?
No, go ahead, finish up, Henry, and I'll...
Yeah, no, to your other question about sort of what we are doing about it as institutions. I mean, obviously AML CFT issues are very important, and making sure, that illicit transactions are curtailed or disincentivized is very important. But at the same time, the institutions like ours are working with governments in the region to try and ensure that they have the supervisory and regulatory capacity to help the system cope with evolving regulations, because I think, as many others have mentioned, if we don't, and if countries are not able to, the implications over the long term could be very severe. And I think the report does a very good job of highlighting sort of what we've seen over the last 20 years in terms of the volume and value of correspondent banking transactions in the region, and the trajectory is not very encouraging.
Thanks, Henry. I want to get into that further in depth. That was one of our first recommendations in the report. Don, let me go back to you. The Caribbean Financial Action Task Force noted that at least 16 banks across the region have lost access to correspondent banking relations. The task force report specifically mentions reputational risk and the high cost of compliance as reasons why banks are withdrawing. Ambassador Sanders spoke about this in his opening comments as well, but from your perspective as Executive Director of the Caribbean Financial Action Task Force, why is this the case? Why is there this mismatch between why banks are withdrawing and some of the reality within the Caribbean?
Thanks, Jason. Yes, as you noticed, as you stated, Ambassador Sanders did allude to this. Essentially, what everyone has said this morning, the Caribbean comprises small states, small economies. And so while there's a comparatively high number of transaction activity within the region, on a globally comparative basis, Caribbean countries are seen as not generating sufficient payment volumes to cover the costs associated with servicing them. So essentially, it's an issue of scale based on a risk to reward ratio, with the extent of the transaction monitoring required by the correspondent banks being too costly for the low payment volumes that are generated by the region. So while reputational risk has played a role in full-scale de-risking, it should also be noted that some financial institutions, as I mentioned earlier, while not losing their correspondent banking relationships, have had to give up certain high-risk sectors that are deemed to impact reputation. So such as the marijuana decriminalization that results in medicinal marijuana, economic citizenship, money service businesses, and cryptocurrencies. So regional reports on significant drug trafficking and money laundering seizures also, the INSA report as noted by Ambassador Sanders, these all go to giving a negative impression or perception of the Caribbean region. And so it affects the feeling of correspondent banking in terms of not wanting to damage their reputations by engaging with these banks. And as we've stated before, this region is sound in terms of AML, CFT, in terms of having the proper frameworks in place. And so it is important that we get that word out and we talk and we collaborate about this. In terms of compliance costs, that has also gone up with the expectation that the regional banks would have similar or comparable standards to those required by the correspondent banks in their jurisdictions in terms of transaction monitoring and compliance monitoring. And with the high level of automation and sophistication of these mechanisms to do that, it's also a cost impact in terms of our banks. So again, we have to find a way to work together and come to a common place where the regional banks, the regional financial system can work with the correspondent banks so we both achieve equal goals.
Thank you, Dawn. There's a question in the chat here from Sean Gertrude, who mentions the presentation were great, but how do we go forward? What's the answer here? So let me take the last 10 minutes to respond to that question. As I mentioned at the outset, the report has 4 key recommendations. Again, using a regional mechanism to increase transaction volumes, setting consistent standards for international compliance, categorizing correspondent banking as critical market infrastructure, and establishing an annual U.S. Caribbean Banking Forum. And with each of those recommendations, we specifically call out actions that can be taken by the U.S. Treasury Department, in some cases, the U.S. Agency for International Development, U.S. Congress, congressional legislation that could be moved forward, as well as the role of multilateral institutions. Ambassador Sanders, you mentioned at the outset your conversations with the House Financial Services Committee for a number of years and your leadership on this issue. We're asking that the U.S. deploy a lot of different resources from the USG to help the Caribbean on this issue of financial de-risking. Why does this matter for the United States? And more broadly, you mentioned the Chinese RMB. The task force report mentions effects on trade with the U.S., potential instability that can occur due to continued de-risking. So from your perspective, how is financial exclusion and how are these factors, what is the impact on U.S. interests? And therefore, why should the U.S. hold the U.S. government be that much more committed to helping to solve this issue?
Okay, let me start by saying this. I've got to take a small issue with Dawn on the question of correspondent banking relations and who bears the cost for that. The issue was never just one of the cost of providing the correspondent banking relations, because the respondent banks in the Caribbean always paid the cost. The correspondent bank bore not 1 cent of the cost of correspondent banking relations. Those costs were passed on to respondent banks in the Caribbean who met it. So the banks had no risk involved in terms of the money that was being expended for correspondent banking, because they didn't provide it. In fact, we paid for it and they made a profit on top of that. I think the real problem was when the regulatory bodies start setting penalties for money laundering and identified the Caribbean area as a money laundering area. That is where the reputational problem came about. The question then arose as to whether banks that were being provided correspondent banking relations had sufficient capital in the event that they were fined for some regulatory breach of money laundering, could they pay the fine? Because the fine really didn't match the scale of the offense. So if you laundered $20 or $20 million, the fine was exactly the same. So there was a mismatch in all of that. And when the correspondent banks looked at the situation in which the regulatory institutions were saying, we're going to fine you for any kind of breach of money laundering, whether committed by you or your respondent bank, that was when banks began to get fearful. I know this because we've had the discussions with the banks, including in the presence of Congresswoman Waters, and that is what they said. But I think we needed to make that point very clear, that correspondent banking did not cost the correspondent banks money. It was the respondent banks who paid. Now, you asked me about why the United States should care about all of this. Well, first of all, the United States has perennially enjoyed a balance of trade surplus with the Caribbean. The balance of trade surplus over the last few years, I think, averaged about $8 billion. Now, $8 billion a year may not be a lot of money for the United States, but it's a lot of money for the Caribbean. And but if we could not pay for what we bought from the United States, and I'm only talking about trade in goods here, not trade in services too. If we could not pay the United States for those transactions, and we need correspondent banking relations to do it, that's trade that the United States would lose. We would then have to divert that trade to somebody else to buy the goods that we are buying from the United States. $8 billion provides jobs in the United States at the end of the day. So that's another reason why the United States should be concerned about it. And finally, if I may say this, if our banking system were to collapse and we could not sustain business transactions, obviously our commercial sector or productive sector would collapse with it. That means unemployment would grow, poverty would expand. Where do you think unemployed and poor people go when they've reached a point of desperation? They get out of the circumstances in which they are, they seek refuge somewhere else. And the place of choice is always the United States of America. So it would mushroom the number of refugees that the United States is faced with, and that's a very good reason for doing it. Now, Marco Rubio, the senator from Florida, and Menendez, a senator from New Jersey, have just introduced in the United States Senate a bill called the Caribbean Strategic Security Act, in which all sorts of things are being required of the Caribbean in terms of the United States' security. And I invite everybody to read that act because it's important that they do. They cast that act in the sense that they say that Russia and China have malign interests in the region, which must be countered by the United States. Now, to counter that, they want Caribbean cooperation. That's going to cost us money. It's going to cost us help. It's going to cost us not only treasure, but limited resources. If that is the case, then the United States has an interest in our security. That is in the United States' interest as well. And that's why all of this dovetails into one another. We cannot look at correspondent banking relations in isolation from access to financing for development, which many of our countries are denied because the United States and the institutions say that we are high per capita income countries. It's not just Barbados and the Bahamas, Antigua, St. Kitts, Trinidad and Tobago. We're all included in that lot. Throughout the COVID-19 pandemic, for instance, Antigua did not get one penny from the World Bank or the IMF because they say we are a high income country and therefore don't qualify.
Thank you, Ambassador Sanders. I really appreciate that critical look at why this matters for the United States. Economic perspective, security perspective, strategic perspective as well. Don, we have just a couple more minutes. I want to get back to you, Don, and then wrap with you, Henry. Don, I want to ask, there's a number of steps that are recommended in the report that the U.S. can take to address some of the challenges the Caribbean is facing, specifically steps that the Treasury Department can take, everywhere from helping to standardize compliance requirements, facilitating technical trainings, that can help correspondent banks meet some of these requirements, helping to be a partner in organizing annual hybrid banking forum to establish those relationships, which are so critical for correspondent banking ties. Bill, what do you see as some of the most important steps the United States can take to help the Caribbean address the challenges of de-risking?
Thanks, Jason. I agree with all those steps and recommendations that are noted, and in particular in terms of having similar standards and educating Caribbean central banks, etc., and collaborating with agencies in the Caribbean, such as the CFATF, the Caribbean Development Bank, the Caribbean Bankers Association, etc. This is what I was talking about in terms of standards and costs. The American regulators put standards on their correspondent banks, and then the correspondent banks expect to see those standards and those mechanisms for compliance replicated in the Caribbean, and that's where the cost comes to the respondent banks. So, for example, recently, due to the pandemic, there's been an increase in focus on modern slavery and human trafficking, environmental crime, anti-corruption, anti-bribery measures. And so it's important to ensure that the banks in the region understand fully what the standards are, and we're not talking just about what FATF puts out, that the correspondent banks expect them to have in place and focus on. So that's very important. In terms of the collaboration, important for the US Treasury, noted is the trade between Florida and the US, I think from not only an economic but a political point of view for economic and social and political stability. It's important, of course, for us to have this relationship so that there is a fair or level playing field. We shouldn't be seen as the United States backyard, but rather as their front lawn, where we can collaborate and work together to ensure the financial integrity of the Caribbean is secure. So this is a very important issue, and the US is close, not only in terms of proximity, but in terms of their reach into the Caribbean. And therefore, just to sum it up, I know we're running on time. I agree with the recommendations that are there. We need to collaborate. We need to talk about this in terms of moving forward. Thank you.
Thank you, Don. And Henry, I want to wrap with one last question to you, which is one of the recommendations, using a regional mechanism to increase transaction volumes to make the Caribbean that much more appealing as a destination. And that recommendation notes the opportunity for international financial institutions, such as the Inter-American Development Bank, the World Bank, IMF, to work with Caribbean government central banks to create a regional grouping or mechanism that pools transactions to a size as profitable for their correspondent banks. From your perspective, the IDB, how would that potentially work?
Well, thanks, Jason. I mean, before I say something about that particular question, I mean, in terms of the perspective of interest here, I represent, I work with an international organization of which the United States is a member, but also Canada, European Union members. So I think, and our institution has been at work in the region for more than 6 decades. So I think in terms of interest, there has been a long-term, robust commitment by the United States and other countries to helping countries in the region develop. And I think, sort of defining this as an issue that is a brake on development and a brake on financial development and inclusion, I think that is one of the really important ways to get traction on the policy side, both in the United States and in other regulatory jurisdictions that matter. In terms of the recommendations, I think there are lots of excellent recommendations. Again, these recommendations come from the task force itself, so they're not mine in particular as a member of the task force. But I think, as I mentioned before, the IDB and other international organizations have been working hard for a very long time to try and support governments in the region, as I mentioned before, with capacity building, technical assistance, financing to increase regulatory and supervisory capacity, helping banks improve their KYC practices to be able to meet these rising standards and expectations. So hopefully we can continue to do that, and that is certainly a priority for us going forward in the region. I think all of these recommendations have potential. I mean, obviously they require some more exploration in terms of feasibility, but I think that there is a model out there with the one you mentioned. The money transfer services have been crucial to help offset some of the loss of correspondent banking relationships And as mentioned before, this is crucially important for the region. By pooling all of the lots of transfers, you offset some of the costs and requirements in terms of KYC and reporting, and that has helped to facilitate flows, particularly flows of remittances, which has been crucially important for the region. So I think, exploring these ideas and helping to build on that kind of model has potential to be very influential and very, very beneficial. So I think that and all of the other recommendations there, are very promising, and I look forward to working and our institutions with the task force to build them out.
Well, thank you very much, Henry. And I want to end on that note. I want to, in the interest of time, thank Ambassador Sanders for your participation and, of course, all the work that you continue to do on this issue, separate from the task force. And thank Henry and Don for not only joining us, but for your participation as members of the task force. And also thank the other 12 members of the task force, 14 members in total, who spent considerable time putting together this report, ideas, recommendations, and having outside conversations and dialogue to ensure that the recommendations and ideas have traction in addition to just being on paper. I also want to thank Governor Haynes for joining us, Ambassador Insinali, Melanie Chen for kicking off this conversation and her vision and leadership on the importance of this issue from the outset. And then thank my two colleagues, Wasim Mullah, Assistant Director for the Caribbean Initiative, and also the Rapporteur for the task force, and Willow Fortunoff, who have both worked together to put together this event. Again, I would like to reiterate the commitment of the Caribbean Initiative at the Atlantic Council's Adrian R. Latin America Center to move forward on the recommendations of this task force and to continue to prioritize the importance of financial inclusion as part of our broader work on the Caribbean. With that, thank you all very much for joining us and have a great rest of the day.